Hello, I'm a real estate broker in Northern California with Gold Country Properties, and I serve at Tuolumne County and surrounding areas and the East Bay. And today I'm joined by James Callejas from IPX 1031. He's going to be talking to us about a very important tax investment strategy that's really important for investors. And hi, James, how are you? Thank you for joining me today.
I'm doing well. I'm happy to be here today and talk 1031.
Thank you. Well, what do you have to say about 1031? Why is it so important for investors?
Well, quite honestly, I think it's the best wealth building tool that exists out there. Imagine this, where you can buy something many years ago, have it appreciate in value significantly, and then when you sell it, you don't have to pay anybody anything in taxes. So the 1031 exchange, just so that we're very clear, is where you sell and buy a piece of investment property. This is only for real property, but sell and buy a piece of investment property. And if you follow certain guidelines and timeframes that I will mention today, you'll be in a position to defer all capital gains tax. It is a great wealth building tool. There's nothing out there like it. And especially for people in the state of California who have massive appreciation and massive taxes as well, it is an essential tool that we all need to be very familiar with.
Great. So what are some of the requirements for this 1031 exchange to be able to make it happen successfully?
Sure. So here's how it would work. Let's say many years ago, and we'll keep it as a residential property example. Many years ago, we bought a single family home. Maybe even we bought it as our primary residence at the time. And after time, we had kids, got a larger family, or maybe wanted to move somewhere else. So we decided instead of selling the property, we would turn it into a rental. And now, again, we're years later, maybe 20 years later, looking to sell the property. Well, we bought it for almost nothing, and it's worth millions or hundreds of thousands or whatever the number is. But the underlying factor is that if I were to just sell that property, I'd pay a ton of capital gains tax. So we decide to sell it, but we have a plan in place, and that's the 1031 exchange. So it's an investment property, it's a rental. We put it on the market very quickly. In this current market, it goes into contract, and then we would open up escrow. That's how these things work. We decide that the property no longer works for us for whatever reason. We put it on the market, accept an offer, open up escrow. Then I get involved as the 1031 exchange company. We're known as a qualified intermediary. We must be in the mix, putting together our legal documents prior to the close of escrow. Basically, what we do is we assign into the rights of the contract and act as the seller for the seller. In an exchange, the seller can never touch the money. So we set up an account, we put legal documents together, we act as the seller, we show up on closing statements as the seller for the benefit of the actual owner, and then at the close of escrow, the proceeds go into the 1031 exchange account, and then the clock starts ticking. You have 45 calendar days to identify potential replacement property, and 180 total days to close on whatever you identify. Now, as long as you use all of the money and buy of equal or greater value to what you're selling, you're in a position to defer all capital gains tax, state, federal, depreciation, recapture, Obamacare, all of it. You use all the money, buy of equal or greater value, and get this. You're selling a single family home that's a rental. I could buy multiple single family homes. I could buy condos that I rent, townhouses that I rent. I could buy a farm. I could buy a vineyard. I could buy bare land. I could buy an office building. I could buy an industrial building. I can buy any real property in the United States that's used for a business or investment purpose. And all I got to do is meet these guidelines and timeframes, and I'm in a position to pay absolutely zero in capital gains tax. So that's why this code is so huge. Many people think the 1031 exchange is out there just so that you don't pay taxes, but that's not the case. People do 1031 exchanges to get a better piece of investment property. And sometimes, especially in the state of California, you've been a landlord for 20 years. Maybe you're tired of being a landlord, and maybe you want to get into something that's passive. There's investment properties that qualify for that. Or maybe you've built up so much appreciation that the cash flow no longer makes sense, and you want to go somewhere else where you can get better cash flow, whether that's selling a single family home and buying a 4-unit, a 10-unit building, or something else that has more income, or leaving the state and buying more properties, or even staying in the state and buying more properties. It's up to the investor to determine what they are looking for, whether it's better cash flow, new depreciation, more appreciation, different product type. leaving the current state, going in to buy something that you're eventually going to move into as your primary or vacation home for the future. There's so many different ideas. Once somebody tells me what they don't like about a property, I start thinking of exit strategies that'll work well for them in the future. So bottom line, as long as you are familiar with the guidelines that I mentioned, and can always ask me for questions.
Sure. So the one
Need
thing
answers, it works.
that required for sure, you have to have somebody selling a home that wants to reinvest. They have to have a qualified intermediary to make that happen. That's one of the requirements.
Yes, you
You
can't
cannot
just
sell
sell a
it
property, take the money, and then look to buy something else. That person's a
and
taxpayer.
and
They
expect-
touch money, it doesn't work. We have to be in the mix.
Okay, and so you also need the title company, obviously, to work in conjunction with the intermediary. And up to how many properties can you buy when you do a 1031 exchange? Is there a limit to that?
Yes, there are different rules that you can choose from. The first rule is the most common rule. It's called the 3-property rule. This rule says, okay, you can identify up to 3 properties of any value. You don't have to close on them all, but that's the maximum number that you can identify, no limit on the value.
Mhm.
Then there's the person that says, okay, that's not going to work for me. I'm selling out here in California for $1 million. I want to buy something in another state where I could buy like 10 properties.
Right.
That person will use the second rule. The second rule is the 200% rule. The 200% rule says, okay, you sold for $1 million. 200% of $1 million is $2 million. This rule says you could identify up to $2 million worth of real estate. So if you're identifying, let's just say $200,000 properties, you could identify up to 10 of them. Don't got to close on all of them, but you want to close on at least 5 to get to $1 million so you'll pay no taxes. And the third rule, and I got to be honest with you, this rule in my 24-year career, I've seen work under 20 times when it's past certain time frames. It's called the 95% exception, and this is how it works. This rule says you can identify as many properties as you want, no limit on the value either, but you must close on 95% of the value that you identify. Basically, that means if you don't close on everything, your entire exchange will fail. I think it's a very risky rule to use unless you have a certain guarantee that you're going to close on the properties within the time frames. But those are the 3 rules. Depending upon what strategy you have on replacement properties, I'll let you know which one works best for you.
Okay, that's great. And as far as, a lot of people are sick and tired of having rentals, long-term rentals, and they're, selling their properties because they want to get out of that. I always say vacation rental is one way to mitigate some of the hassles that we have with long-term rentals. So what are the requirements for vacation rental property? Can the owner use the vacation rental property? Is there any exceptions for the rules? And can you go over that a little bit?
Sure. So vacation homes, second homes don't qualify for a 1031 exchange, but it's real easy to make a vacation home an investment property. Here's all that you need to remember. The property must be rented. This could be Airbnb, short-term rental, VRBO, all those qualify, but the property must be rented at least 14 days per year, and the owner cannot use it for personal use more than 14 days per year. Now, that's all that you have to do. And if you do that for 2 years after you bought the property in a 1031 exchange, you could actually convert it to just your primary residence or a full-time second home without the income. Most people want investment properties for income. And when people are looking to do short-term rentals, and by the way, this is very popular in a lot of different areas because the short-term rental market is so hot.
Mhm.
This works out very nicely. And the minimum criteria that I mentioned, the 14-day rule, that's all you have to do.
Now, I heard about an exception, and I don't know whether that is true or not for sure, but if you have the property available 365 days to be able to be rented for vacation, is it a 10% rule that you can use it?
So there's the 14-day rule and the 10% rule, but just having it available 365 days does not mean that you can utilize the 10%. So here's how it works. It's not the availability, it must be rented.
Okay.
So if you're going to rent it more than 150 days per year, then you can use the 200% rule for personal use reasons. You can use it 10% of the time that you rented for personal use. So if you rented it 150 days out of the year, then you could use it 15 days rather than 14. So unless you cross that threshold, you're going to be using the 14-day rule. So I had one client actually in my career that rented it out about 300 days per year. and they could actually use it for personal use for 30 days, which is basically a month. So
Right.
depending upon how much time you rent it throughout the year will determine how much personal use you can use it. I don't really mention that rule that often because most people don't rent it out more than 150 days. But if that does happen, it's a great time to take advantage of the personal
Right.
use of that vacation
And you
home.
probably, if that's the case, if you have to spend 300 days renting it, then you won't be able to use it until probably the end of the year, I will imagine.
Yeah, you might pull some, I'm gonna lease it out for 11 months and then the 12th month, I'm gonna use it for
Right.
personal or something like that. It's kind of hard to
Yeah.
do it like that, unless it's in great demand. But even there, the turnover to clean properties up and all that, it would be hard to rent it out more than, 250 days a year. Really hard.
Now, I recently heard this thing called the Delaware Statutory Trust. Can you tell us a little bit what you know about that?
Yeah. So I mentioned earlier that some people want to sell their investment properties because they're tired of dealing with tenants, right? The tenants, the trash, the toilets, the termites, all the terrible T's, but they don't want to sell it and pay taxes. And they don't want to sell it and get into another rental where they're dealing with people. And that's where the DST, the Delaware Statutory Trust, becomes so popular. And basically what it is you could sell that, let's say it's a single family home that's a rental, get out of the landlord mentality and get into something where you buy a fractional interest in a large commercial institutional property. Here's a couple of examples of the DST. Basically, I sell a single family home, do the 1031 exchange, buy, I don't know, a 1% interest in a 400 unit apartment complex, which usually sells for about 100 to 120 million, depending upon where it is. Now, on my own, I couldn't buy that. But through the Delaware Statutory Trust, I can own a fractional interest in a large commercial institutional property that I'm going to have nothing to do with. Now, these multifamily products, if that's the direction you go, they're probably brand new or built within the last 2 to 3 years, no maintenance in an area that is growing. So you'll get future appreciation and you will do absolutely no management on the property at all. Basically, you'll get a check each month and be a proud owner of whatever percent of this large property. Now, it doesn't have to be multifamily. That's just one example. Self-storage, other commercial triple net properties. So, you know, depending upon what you feel comfortable with and what product is available. I had one person that bought into a portfolio because that can happen in a DST, and the portfolio consisted of a bunch of Walgreens, CVS, Rite Aids, and self-storage all in one mutual fund of real estate, similar to a REIT, but not a REIT. So
Right.
depending upon what you're looking for, you can buy into different types of DSTs, different product types, but it's all the same thing. You do absolutely nothing. You get a check each month, and it's in a very secure investment.
So how long have these DSTs been around?
18 years. They've been around since 2004. That's when a revenue procedure came out that supported the Delaware Statutory Trust and the way that this works. These investments, this is for the person that no longer wants to be actively involved with their investment property and does not want control. They usually resell in about 5 to 7 years, and then you can do another 1031 exchange or cash out. And when you 1031 exchange again, you can either put the money into another DST or back into traditional real estate.
Okay.
Most people, to be honest, that do the DST are usually older because they're tired of owning the real estate and they want to go into something else, and they no longer want control. And when they resell, they just go back into another DST because they liked it so much.
I'm surprised they don't have the real estate investment trust available.
It's a security, not real property. That's the reason. So this will be about the closest thing that you can get into. If you really are interested in getting into the real estate investment trust, the REIT, there is a way to get into it through the DST, but you can't just choose any REIT you want. Basically, you buy into the large commercial institutional property through the DST, and it's on a schedule to be bought by the REIT. It's usually a Black Creek REIT in a couple of years. But once you're in that Black Creek REIT, they call it UPREIT. When you sell or ever try to liquidate, there is no more 1031 opportunity because it's no longer real property. So um, there is a way to do it, but only for a specific type of client that's interested in that type of investment. It's not used that often, but if somebody is truly interested in getting into a REIT, just let me know and I'll let you know how you can get into this particular type of REIT.
Now, these DST investments kind of makes me a little bit like, well, I don't know, when you don't have control of something, what has been the return on these investments probably?
So for somebody that wants control, to be honest, it's not for you.
Right.
You'll never be happy with it because you're always going to be the person that wants to go to your property, look at the property, and do things like that. This is
Own the
not for
property,
you.
right? Because if you
Yeah,
own that share, you might not be available or something might happen and you have nothing.
yeah,
Happy.
it's different. So I did have one guy that sold out of the DST when the time was to sell, and he didn't want to reinvest in the DST. And he told me, it's like, I just hated it. I'm like, why? Was it bad returns? No, the cash flow was fine. It was great, everything they said. But I'm the kind of guy that likes to look at the property, be on the property, manage the property, be actively involved. And I hated that part. Given that, that's the only guy that ever complained and told me about it. But the return on a DST right now is probably anywhere between the mid threes to the high fours. Current market conditions, they used to be higher than that. Anything higher than that, you're probably going to a high risk DST, which I wouldn't recommend. You might see something at 6 or 7%, but those investments are kind of aggressive. And I'm not an aggressive investor, but if you talk to a DST sponsor, find out lowest returns, highest returns, risk of something going wrong. You want risk reward and know all that from the jump.
Exactly. So where do you see the CBDC and blockchain with a 1031 exchange opportunities? Any idea on that? That's kind of a new thing that they're talking about, the blockchain. And
I'm not sure. I don't think it's not a part currently. I don't really know. I'm not a good crystal ball person with this because then I start making predictions and it doesn't happen.
Right.
I'll have to get back to you on that one.
Okay. And so what are you seeing in the news? I'm going to share the screen now with something from your website, by the way, if you guys want to take a look at IPX 1031. And talking about Biden is going after 1031 exchanges again. This was an article from April of this year.
Yeah. So President Biden had initially come up with the proposal last year, close to this time around May. And within the proposal, he wanted to limit the 1031 exchange to 500,000 or $1 million in certain circumstances. He didn't really spell it out clearly. And of course, we've been threatened. I've been doing this a long time. Each new president threatens it because they think that it's going to make money for the economy. It really doesn't. All it does is make people not sell their real estate because they don't want to pay the high capital. It makes no sense. Get rid of the 1031 exchange and increase capital gains tax. People just won't sell. But basically, last year he came up with the proposal, and the proposal, when it came out, this came from Biden's camp, by the way, not the Senate or not the House. And when it came out last year, we were on top of this. We talked to congressmen, and unanimously, the congressman said, take this out of the proposal. And there's more to it than just that. But after a couple of months, none of the proposals that the Biden camp came out with worked, but that was completely taken out for a number of different reasons. Well, recently, he came up with same exact proposal. Nothing has changed with it. So we're pretty confident that we'll get the same results because we've already spoken to everybody about this and they're all on board on getting this out. I just think that for whatever reason, they submitted the same exact thing. It made no sense to me. There were no changes. It pretty much looked like they Xeroxed the proposals from before. And so we're going to do what we did last year in order to make sure the 1031 exchange remains safe and is not changed in any way. And we're more confident about the same result that we got last year because everybody was on board with this last year. And now they're going to be like, what do you mean? Same thing? Yeah, it is. So come on, let's get this out again.
Right.
But that's the latest and greatest on that.
There was also some talk about the taxing the unrealized gain. I don't know if this was just people.
There's all kinds of talk about different things that just don't make sense out there. I'll have to look more into that. And it's funny, we should have had this call in about 3 hours instead of right now. We're having a Zoom at 2 o'clock today to just go over that. So
Okay.
I'm not clueless about it, but I'm going to get the latest. We have people in Washington, to answer your question, and I'm waiting for my update at 2 o'clock today on our conference call or Zoom call to determine exactly what this means in our strategy. But from what I've told, it was the exact same proposal. Pretty much looked like he Xeroxed it. We're in a position to fight this just like last time. And we're very confident because of the results we got last time. And every single congressman was on board with us.
Great. Well, we'll just
Senate,
have to
House,
follow up.
everybody.
We'll
Yeah,
just
we
have to
will.
follow up later. All right.
Sounds
Well,
like a plan.
I think that's all I have for now. Anything
Okay.
else you want to add to it? How can people contact you if you want? I'm going to put your number and your email down below.
Yeah, my number is right below in this Zoom. But like you said, share both, please. I'm
Yes.
here to help answer questions. And if there's a need, I'd love to help facilitate the 1031 exchange as the qualified intermediary. Some people don't know what does or doesn't qualify. Some things are confusing. Some people want to know if they can do certain things. That's my job, to answer these questions and filter people. And if they need the assistance, I'm happy to help.
Great. Thank you so much, James, for joining us today. And yeah, we'll check back later on those things you were just talking about.
Excellent. Look forward to helping you, everyone. Have a great day out there.
Thank you so much. You take care.
Okay, you too. Bye-bye.